Thank you so much to Kate and Dr. Kuno and Alex for that amazing conversation. Oscar, can I refer to you as Grand Fellows since you went through the Halcyon program so much earlier than me?
I just met Mariah this morning for the first time, and she's already calling me old. We all know there's gray hair under that hat of yours.
You know, as founders, we wear so many hats. We're the marketing team, we're the sales team. And so we don't need to worry what's under there. But I'm proud to be a part of this Halcyon community and just hearing about the origins of how everything first started. And I'm so inspired. And I want to introduce the next panel and their role on development of finance and supporting innovation. Many Halcyon Fellows are actively working on global issues that touch on the United Nations Sustainable Development Goals. Maybe you all have heard of it. And so this panel is going to give us a peek into the whole world of multilateral cooperation and building solutions that make the world a better place for everyone in this room and all of the reach beyond that. Let's clap on the next panel.
Good morning, everyone. How are you today? That's wonderful. My name is Anna Thompson-Quaye, and I work with the World Bank, lead on partnerships and engagement. Very, very pleased to have you all here as part of this session on looking at innovative solutions that you're all working on and how development finance can support that in tackling the SDGs. So let me ask my esteemed panelists to introduce themselves. Dia?
Yes, thank you, Anna. Good morning. My name is Dia Martin. I'm a managing director in the Office of Catalytic Investments at the U.S. International Development Finance Corporation. It's a pleasure to be here.
And I'm Sashi Jayatileke. I'm a senior climate finance advisor at USAID.
Great, so we'll get right down to it. The World Bank actually is one of the leading development agencies that actually started supporting social entrepreneurs in low-income countries and fragile and conflict states, looking at ways to focus on more inclusive economic growth. And so we're really pleased to be a part of this discussion. And Dia, let me turn to you in terms of some of the work at DFC and how you see the need for risk mitigation whilst providing funding for early stage companies. What are some of the significant hurdles you see in terms of increasing and accessing to traditional finance?
Thank you for the question. And I would say that funding early stage companies and supporting funds that also support early stage companies is essential to DFC's mission and mandate. Let me take a minute to talk about DFC and what we do. As the U.S. government's development finance institution, we deploy capital across the world's emerging markets to address developmental challenges, as well as to advance the U.S. government's foreign policy interest. We have a very large portfolio that's over 40 billion. In the past fiscal year alone, we committed 9.3 billion in capital across 130 million plus transactions. We have a full toolkit of support for our clients. This includes debt financing, which is the bulk of what we do, political risk insurance. We're one of the few organizations, along with the World Bank's MEGA group, that provides political risk insurance, equity financing direct to companies and to funds, as well as much needed technical assistance, which I'm really excited that we partner on with our colleagues at USAID. At DFC, we are structured to take strategic risk to support innovative and impactful solutions to developmental challenges. What does that mean? We have the Office of Catalytic Investments that was created to strategically look at how we can support and take risk for all types of companies, but specifically within the Office of Catalytic Investments, we manage our Portfolio for Impact and Innovation program. This program was set up specifically to address the needs of those early stage founders that have developed an idea or at the point where they want to scale this business proposal or this business opportunity. And we often come in as the first institutional investor. In this program, we've provided approximately 600 million in funding to 90 plus companies. I'll end by highlighting two of the companies that I'm extremely excited about. The first one is Ampersand, one of the first e-mobility companies in East Africa. We supported their expansion in Rwanda, as well as in Kenya. And we were able to work collaboratively with USAID's DIV program, which was very exciting. The second is Kasha. This is a high growth, women-led, women-founded business that supports personal and healthcare products for women across East Africa. This is another example of a really exciting opportunity where we could support an early stage business with a small equity investment and help them scale and grow to be a very successful, sustainable business that is also extremely impactful. Thank you.
Thank you, Dia. And you touched a little bit on a question I was wondering about, which is the types of partnerships that you're involved in with other stakeholders. And so you alluded to some of your work with USAID. Could you please expand on that a little bit more?
Sure. We love to work in partnership and collaboration. One, it's very efficient. You're also able to use your different tools and products in a complementary fashion, as well as reach out to clients and markets that we may not be able to reach out to on our own. So a number of our partnerships have been with US government counterpart agencies, as well as other DFIs and the private sector. A couple examples of where we've worked really well with USAID is with a partnership through our team that provides loan portfolio guarantees. We've worked together to support a bank in Malawi. They've provided technical assistance focused on certain areas such as agriculture, SME, et cetera. We've provided the loan portfolio guarantee to enable lending to those clients. Through this program, we've deployed about 3 million to SMEs, supporting a number of first-time business owners as well as first-time borrowers, and about 30% of the clients are women. I would say another exciting example where we've worked with USAID is in a lot of the collaboratory work that we look at together pre-investment. So oftentimes we'll talk with them or partner with them where they would provide technical assistance, where we would provide financing. A great example is our MOMS initiative. This is Maternal Outcomes Matter. We partnered with USAID, Credit Suisse, a private investor, as well as Merck for Mothers to support maternal health care in sub-Saharan Africa, as well as in India. We also partner with MCC, the Millennium Challenge Corporation. We're working with them on an African Catalyst facility where we can come in and provide investment as they look at more government-wide support in country. We've partnered with other DFIs on a regular basis, often supporting funds together. One quick example is AfriInvest, a fund focused on sub-Saharan Africa, where we're supporting SMEs across diversified sectors. And then lastly, private sector partnership. We've partnered with Shell Foundation for e-mobility across East Africa, as well as others in the development space. I'll pause there.
Well, that I actually appreciated you elaborating on those because it actually shows the diversity of partnerships that you have, not just with US government agencies, but also with the private sector and also philanthropic partners that are key stakeholders. And so that's very helpful for us to get a bit of a flavor about how you're working. And maybe Sashi, if I could perhaps turn to you on the USAID side, as you're looking at mobilizing private sector financing for climate-related projects, what are you seeing as some of the challenges around that?
Yeah, thank you so much, Anna. As you know, so USAID is principally a foreign assistance agency, which means that our job is essentially to be in the field in over 80 missions around the world, and really support host country governments with achieving their SDGs and their climate-related goals. This means working from across Latin America and small island states to Africa to Asia, tackling a complex set of issues. We like to work with the DFC, as Dio mentioned, in order to make it a little easier for them to enter those markets. Why? Because private financing in these markets are complicated. There's a lot of information asymmetry in regards to both the data available for the financial sector, but when then you tackle climate, nature-based solutions, it's really complex and the data isn't current. So for a DFC to make a decision on a financial model that's based on data that could be, a few years old, they need a little bit of support getting to that bankability. And so our job oftentimes when it comes to mobilizing private finance is on the earlier stage, pulling actors together, both from civil society, sometimes from the public sector, to address some of these issues of both data, the policy landscape often is complicated, and then try to find a convening in which we're able to align on objectives. And the objectives could be, in the case that, Dia mentioned with mom's maternal child health, a lot of what I've been doing lately is focused around reduction of greenhouse gases, or how can we test out new nature-based solutions for adaptation. And once we align on those larger objectives, then we would proceed in looking at, could our funding actually help structure something that then allows the DFC to come in with a guarantee, with investment, with loans, and then collaboratively work together. We also do find that working with civil society and our partners on the ground that have been working on food security or adaptation allows us insight into current and challenging issues that could be addressed quickly with our existing bilateral programs. And so we often work in concert with our 80 missions to address some of these issues.
Thank you. Thank you, Sashi, for that, and also for highlighting some of the engagements you have with civil society partners at country level. And it seems as though you then have your USAID mission and development partners tackle any of the challenges that the CSO partners may sort of raise as you think about financing. And that's just speaking to a little bit of the how, but I would be more curious if you could expand,
Sure.
how you really doing this.
Yeah. So one of the biggest barriers is the cost of capital, right? So all of what I outlined leads to essentially private investment unwilling to invest because the cost of that capital is far higher than what they are able to bring to their investors. And so for us to reduce that cost of capital, we look at what are elements that could be grant funded, could be supported by due diligence through legal analysis. And we source those decisions through a competitive procurement, oftentimes based on KPIs that are transparent and available for everyone. So one example could be in accelerating the energy transition. Our colleagues in State Department really looked at how can we bring more capital to countries that are trying to accelerate out of coal into renewable energy. And so we put out a call for proposals 2 years ago, and we were very clear about what success for us looked like. But we did this also with the Danish government in order to show that this was not just about grant funding the initial start of a fund, but also the Danish government would be then bringing in their first loss capacity. Through a proposal process of about 40 investment vehicles, we together judged the most competitive bid based on the KPIs again. And then our colleagues in Denmark looked through the financial models. And that's a similar model to how we had worked with DFC in Mexico. we worked on a project on on nature-based solutions and forests. For that one, our job was really to bring everyone around the table, identify the issues, and then find investors that were willing to perhaps adjust their return in order to reach a deeper population in the forests of Mexico. And then, we were able to partner with the DFC for a guarantee. I'll give one more example in Brazil, where we spent 2 years working and understanding in the Amazon if there was potential to invest in enterprises working on bioeconomy and nature-based solutions. And after 2 years of collaboratively working with civil society and the government, we were able to find that there was an investment fund that was willing to come in with a large guarantee. And so essentially USAID provided the cost of that huge subsidy that then the DFC was able to provide a 50% guarantee. But today, what's exciting after 3 years is that now there's a lot of investment funds looking at this market, but it wouldn't have happened if we hadn't partnered together and subsidized that initial entry.
Thank you so much, Sashi, and I appreciate you sort of expanding quite a bit, particularly even the last example in the Amazon, and how these investments then provide an ability to crowd in the private sector partners or other investors within the space. I also appreciated the fact that you're both also, well, the agencies are working also with local organizations and soliciting feedback and input. And so it's quite inclusive in terms of your approach to tackling social innovations around SDGs. And we are really at a pivotal moment. I think all of you realize that we are going through a poly crisis, particularly in low-income countries. And so it's really quite important that we are working in a very sort of inclusive manner, but also looking at how do we engage social innovations, how do we support social entrepreneurs in a number of these countries with development finance and the impact that development finance can have in collaboration with a lot of local partners. So thank you so much, Sashi and Dia, for our conversation today.